Yo, what's going on, my party people? Well, we have so much to cover today. But before we do jump into it, I just want to give a very special shout out to a very special someone. That person is Carson. It is his birthday today, and just want to wish him a happy birthday. You're the man. This is my girlfriend's little cousin, who is now literally like a cousin to me. So shout out to you, man. Hope you have a wonderful day. But now let's talk about AMC. A lot of stuff to cover today. So, first, it was quite a funky day, if I have to say so. Where are we here? 120. That's today, Thursday. So, early morning actually had some very healthy price action. Why is this? Well, as we can see on the 5-minute chart, and of course, we're going to start with the 5-minute and then work our way up to the larger scale time frames. We'll go to the 1 hour, the 1 day. We're also going to compare it to the S&P 500 because this bleed in the end of the day was the same thing that happened with the SPY in just about every single ticker out there. Things are getting wild, everybody. So anyways, early morning had that push, and we did come up to some resistance here at $20.20, we'll call it. But look at this. All in all, increasing buying pressure to the upside. But once we did get rejected, we got that huge red volume bar, which is totally fine, and brought us back down. Really, most of the day today was consolidation around this, we'll call it like $19 range. This was actually great consolidation, specifically after we've just been hammered the past couple of weeks. So I'll take that consolidation. And then this end of the day, don't be worried about that. And we're going to talk about why this actually was almost a good thing today. But this was the same sell-off that happened with the SPY, the triple Qs, every single ticker out there. So don't worry about it because it absolutely is nothing. Anyways, just real quick note. Can we go into extended hours there? Yeah, so remember when they said movie theaters are dead because of streaming services? Well, this is Netflix, and it took a giant dump after hours. Not pretty at all. They missed on subscriber and growth, and even they raised prices. I believe this was maybe last week, something like that. So, just know, movie theaters aren't dead. Maybe streaming's dead. Who knows? Maybe the whole coronavirus Netflix pump, maybe it's over, guys. But anyways, very much off topic. Back to AMC. Just wanted to share you with that. And plus, let's not ever listen to Jim Cramer, because he said just last week, Netflix is a buy. Yeah, well, honestly, my trading strategy for 2022, do the opposite of Jim Cramer. Whatever he says buy, I'm literally going to buy puts for. That's the only thing I'm hearing out of his mouth. But anyways, AMC, guys. So yeah, this afternoon dumper right here, don't worry about it, because look at this. As we know, AMC has been trading with the SPY. It's just, they're not correlated, but for whatever reason, whether it's liquidity, whether it's, various reasons out there, it's been trading pretty accurately with the S&P 500. But look at this. AMC had a small dip today. It wasn't even that bad. But look at the S&P 500. As you can see, from just about, and this was, 5-minute chart. So we're going to say, I can't read freaking military time. But anyways, at 14.10, we'll call it. I feel so stupid right now. But anyways, look at this. Increasing buying pressure throughout that end of the day. That is very, very bearish, guys. Because when we have increasing selling pressure with price dropping, extremely bearish. You flip that around, that's a very bullish sign, comparatively speaking, to what we saw in AMC early on this morning. So all in all, guys, AMC has been much more volatile than the S&P 500 because S&P is an index, AMC is a singular stock here. But the fact that AMC really held its grounds for the most part and didn't trade on such a volatile note as the S&P 500, the triple Qs, freaking Netflix over here, I'll take that, guys. I will absolutely take that. That is a phenomenal thing that I'm seeing. But let's jump back to the AMC charts, and we'll just go over some key technical levels that I'm looking at. Fat fingers. Sorry, folks, but we're back here. I do want to jump over to this 1 hour chart here because some very interesting things. and we can take off extended hours now that we absolutely ripped Jim Cramer, his team, and just all in all Netflix, I guess. Anyways, so in the middle of the day, we were finding some type of support around that $19 area. It didn't last long. So we can almost kind of take that support line off the charts right here. All in all, this 1965 is acting as some type of resistance, but that's okay. That's totally fine. Because the big thing is, remember on the 14th when we gapped down? Well, we still haven't technically closed that gap all the way. So we do have some type of gap fill from just about $20.14 to like $20.50. Now, we know AMC. AMC likes to close the gaps, guys. So, in my opinion, yes, we are absolutely going to be targeting those gaps. Now, best case scenario, we see that gap fill attempted to be filled tomorrow because SPY was beaten today. So if the SPY can recover going into tomorrow, and we'll kind of get into my predictions for that once we go into the options flow, we'll all tie it together. Well, then AMC has a very good chance of running back into this $20 range, which of course would be ideal because of the open interest and the derivative expirations that are expiring. I mean, hey, at Lou, Lou from Wall Street, I know you, I see you. But anyways, guys, things are, yeah, we've been beaten up, but it's still okay. Now, worst case scenario, and what we've been talking about for some time now, is this gap fill. Yes, let's literally get it over with. Let's fill the gap, and let's start the reversal. Because as we talked about in yesterday's video, and we'll jump out, look at pre-January run-up, the OG January run-up. What happened? Well, we literally just went to the, not to the moon, but we went freaking bananas here at like $5.20 to $20. I mean, that's a giant after-hours pump right there. But before we did even start this next leg up, what happened? Well, we came down and we filled that gap. We tested it, confirmed it as support, consolidated, and then started the moves. And that's really what I'm looking for and why I am talking about this gap fill. We're not just saying gap fill because, hey, it's a gap, let's fill it. No, it's because this is what started over here. And I do believe the same exact thing is going to happen before our next leg up. So that's why I am aiming for the gap fill, but we will talk about a few other things on this one-day chart. Primarily speaking, I do want to talk about the volume because, as I said with the S&P 500, we don't like to see increasing selling volume with decreasing price because it is bearish. Now, what we saw today was that we did get an increase in volume, but what I want to show you guys is it wasn't actually bad. Reason being is, look at this. Where did a large majority of our volume come in today? Well, of course, guys, it was here. This is where we had our volume increase, and that's really where the bulk of that volume came in, meaning it was bullish volume. It was very healthy, natural, bullish. Well, maybe not natural, but regardless with that, healthy price action to the upside. Again, middle of the day, this green candle right here, buy volume, higher than pretty much the rest of the day. Now, end of day, yeah, we traded with the SPY. That's totally fine. But a lot of our volume today was buying volume. So, not saying ignore this red candle or volume bar here, but still, it is totally fine to see that. And actually, the volume was great today. Now, like we've been talking about, volume is really key for that next leg up. Because when we do look back pre-June run-up on this date, 5/13, I know I've kind of beaten this to a dead horse, but nonetheless, we had 294 million shares traded in one single day. And before that, look at, we were at 15, 38, 37, 38, and it sucked. We had this, way back when it wasn't fun. And that's really what we're getting here, where we're getting kind of beat down on low volume, which again is a pretty bullish sign. So seeing that volume is increasing, I'll take it, guys. Regardless if we are going down, it's okay. It's absolutely okay. Now, talking on a more technical level here, RSI, like yesterday, it was still in that oversold territory. So do we still have room to move lower? We absolutely do. We absolutely can run a little bit lower, which would correlate with that gap fill right around at $16. I'm going to call it $16.50. We're going to keep it nice, simple, and to the exact here. So $16.50 would be great. We'd probably get the RSI down to that maybe like 20 level, which would be great because that means on our next run up, we have lots of room to run before we get into that oversold territory. Now, getting into the oversold territory is not a bad thing. It's not, oh, the stock's done. Because if we look back over here in June, we started the run in the oversold territory. That's really when the magic happened. So don't let that fool you. And I just want to make that brief note. Now, anyways, on to the S&P 500 because, as you know, we have been calling actually pretty decent movements with the correlation between AMC and the SPY. So we're going to continue to run with this because, hey, if it works, it works. Now, nonetheless, SPY has been absolutely beaten. And comparatively speaking, AMC has actually held up, typically today, very well to what happened with the SPY because the SPY's down. This was 1.11%. And AMC was down 1.36%. That's not bad. That's actually really good because typically AMC is down like 3x or even 4 or 5x what the S&P does on a single day. So we'll absolutely take that. So in yesterday's video, we did call for some downside with the S&P 500, typically because, well, rising volume to the downside. Not looking hot here. So areas that we were watching was yes, we filled that gap yesterday. So I was thinking if we can't hold support here at $450, well, we're probably going to be coming down to this area over here, this gap fill. Now, does that mean necessarily tomorrow we are going to come down? No, I don't believe so. But the one thing I do want you to watch is going to be making a move back over that 450 level because that would be a sign of there is some bullish room to run. But if we can't, then yes, I do believe we are going to be coming down to this gap fill. We have volume all in all from, we'll call it 1228. From this point on, selling pressure has been moving higher and higher and higher. Now, this is not a great sign. And going down to the technicals, RSI is at 31.24. So again, it has room to run into that negative territory, which the SPY really has not seen that oversold territory since, you guessed it, COVID crash. Anyways, guys, MACD. Well, MACD is falling into the gutter. We're in that negative territory. Big thing I'm watching for is these histograms continue to get steeper and steeper and steeper. Bulls are in control here. But nonetheless, guys, TA, as you guys know, is not everything. So let's first start off with unusual whales. We're going to go over the SPY flow for the day. And all in all, it was pretty much mixed. So I do have this filtered to plays over $100,000 worth of premium spent. And what we got, as you can see, there was some bullish flow in the, I guess you could say, middle of the day today. And that's, or actually this is morning time here, but that was actually when AMC was moving up, and AMC was moving up, SPY was moving up, GameStop was moving up, everything was kind of moving up. I mean, every ticker was green for just about the first 3 hours of trading today. So what you had was a lot of these calls, these puts being sold. Now, end of day, it started to shift. We saw a lot of these purchased puts for 428 strikes, all of them actually 428 strikes, for the expiration of 2/18/2022. Not a great sign. And really for the rest of the day, you got one call or two calls being bought here, but they were for the 450 area. So that would be, as we discussed, our resistance level going into tomorrow. If we can break that, great. But I do believe what's going to happen is we're going to kind of crawl back up because on the 1 hour chart, 30-minute chart, RSI is just beaten to all hell. So I think there is a chance to see a somewhat of a similar day going into tomorrow where we start that creep up, we get that bullish push up. But if we can't break this level, then yeah, we're absolutely coming down here. And who knows? If selling pressure keeps the way it is, it's going down even further. So all in all, guys, be on the watch for the 450 area for the S&P 500, and that will tell a lot of how AMC is going to perform for the day. But nonetheless, seeing that, I guess you could say offbeat correlation between AMC and SPY going into the day. Yes, they were correlated on the movement, but the volatility itself was a lot less than what we're used to seeing. Like I said before, AMC down, the SPY down, let's say 1%. AMC is typically down 3 to 5%. Today, AMC was actually down less than the S&P 500. So looking at the intraday analyst, this is literally the greatest thing that Unusual Whales has put out. What do we see for the biggest option trades going into close today? Well, of course, premiums not as high. Yesterday we were seeing like 22 million, 20 million. Now we're not even seeing a $10 million premium come across. But what we saw was puts being sold. Now, yes, generally speaking, this is a very bullish thing. But let's look at the strikes that were being sold. 460, 478, again, 460. Why are those being sold? Well, it's because they made great money on that. To me, this isn't bullish activity. This is more profit taking, if I'd have to guess. Hey, listen, if I put $8.9 million, we're gonna call that $9 million on a 460 strike for a put for 126. Hell yeah, you banked on that. You banked on that play. So to me, I don't think that bullish is bullish. I think that is profit taking at its finest right there. Because what we're thinking is there's going to be a lot of volatility. So we're going to see swings to the upside, swings to the downside, and it's going to get pretty crazy in the market. The turbulence is going to be unreal. So most active chains, as we can see, puts for the short term, these 121, so for tomorrow, these were pretty popular. We did have a couple of popular calls, but again, they were for what? 450 or 455, 458, 456, 460. So that would be moving into that bullish territory if we can break that resistance. But all in all, open interest increase and decrease, nothing significant. 460, nothing crazy, guys. Short dated contract, so not a lot of data that we can pull from there. But AMC, guys, AM freaking C, baby. Now, we're going to start with this first. Not a lot coming in for larger plays in the market. But again, what's the narrative of this picture? Well, it's puts being sold. Again, that's exactly what we want to see and exactly what we talked about yesterday. That is great to me. Sure, you can absolutely argue the same thing where players are taking profits. But the fact that we are not dropping as much as the S&P 500 is incredibly bullish to me. And you even start to see some calls. Remember, we saw these $60, I forget, June 20th calls for 2022. Well, you're still getting those $60 calls coming in. Another call over here, 124. But actually, real quick, we'll actually drop this premium range, see if we can get a little bit more data. We're going to go to $25,000. And again, what are we getting? Okay, smaller accounts, we'll say, mostly speaking here, under $50,000 premium being sent. Pretty bearish. Puts being purchased today, that's totally fine. Longer dated expirations, 3 coming in here for 3/18/2022. Not worried about that. Absolutely not worried about that. Again, those 3/18/2022s. Yeah. So all in all, sure, the flow is a little bearish, but that's totally fine, guys. Now, looking at the intraday analyst, what do we see here? Well, the same narrative is being pretty much painted here. Puts being sold, calls being purchased. That's good signs. That is great signs. Now, obviously, highest open interest increase. You guys are killing me. These 121, 2022, 145, deep out the money calls. Yeah, they have a ridiculous amount of open interest. But I hate to say it, guys. One day for this stock to go I don't even know what a percent would be for that. But come on, that's not happening. And I am going to be coming out hopefully this weekend with an options-based educational video so we don't YOLO our life savings into 145 deep out the money calls on AMC, because that's just not a mindful play. That's all it is. So nonetheless, guys, it's okay. The market is bleeding. Everything is getting hit. And I mean, specifically, freaking Netflix over here. What are you guys doing in after hours? All right, it's not letting me do. Oh, because I'm on the 1 minute. Huh. Movies are dead. My ass. But nonetheless, guys, we're in a good spot. We have that gap fill. We're trading not as bad comparatively to the S&P 500. Volume is starting to increase. Technicals have been beaten. When reversal? Let's get that gap fill over with, and let's go to the freaking moon. All right, guys, that's all I have for today's video. I'll be back tomorrow. And, of course, like I said, this weekend we're going to be pumping out those educational-based videos for you all, just so we all can become better traders in this market and truly understand what the hell is going on. So, hope you all enjoyed. Peace out. Tune in for the next one.